Morning everyone, welcome to Hana's fourth quarter and year-end review. Let me start off with our annual performance. So for the year, Hana recorded 2.2 billion baht, up 29% over last year, 1.725 billion. For the fourth quarter, our operating profit was 391 million, which was down year on year 9% and quarter on quarter 44%. So in terms of top line sale, Hana recorded a 23% increase in revenue for the year, and as I mentioned earlier, 29% increase in operating profits. The margin was the same at about 9%, but net profit after tax was down 19% from 1.9 to 1.54 billion. For the fourth quarter, sales were up 19% year on year, and operating profits down 9%, and the margin also down 2%. We generated 718 million baht in EBITDA, that was down slightly 3%. And our net cash and short-term investments reduced from 9.6 to about 6 billion baht. So why did our operating profits drop significantly in the fourth quarter? The main reason was that we took a inventory revaluation adjustment of 243 million baht. Our operation in Korea is a startup, and the accounting procedure is normally you will capitalize the overheads that are used to manufacture parts. However, the parts that we are producing are very small because we are just starting up. So this should have been expensed. The amount of 243 million baht, which was written down in the fourth quarter, is not representative of one quarter. It is approximately the whole year, but because it wasn't done in the whole year, it looks a large amount in the fourth quarter. This will be adjusted going forward and will be written down every quarter if there is a loss. So it is also not a cash item as well. In addition, we had a charge of 34 million baht, which relates to impairment of equipment. So this is machinery which management believe does not have any further useful life due to a change in customer orders. Secondly, why did our net profits drop significantly? We took a charge of 420 million baht, which relates to an investment we made in the Credit Suisse Supply Chain Fund. This was over a year ago. This fund was closed down because apparently there was some fraud relating. Since that time, Credit Suisse has managed to retrieve 70% of our investment, but management believes going forward it will be very difficult for them to get additional returns beyond the 70%. Therefore, we have decided to draw a line under this issue and take a charge of 420 million baht. Okay. If there are funds coming back going forward, they will be written back as an exceptional gain. Moving on to our operations, we recorded sales in the fourth quarter flat, slightly down 1%, but for the year up 18%. So it was a good, strong year for Lamphun. We see continuing demand for auto parts and test and measurement, and a growing number of devices relating to the growth of the EV car business. Our wafer scale manufacturing was very strong, which relates to cloud computing, and this continues to grow very steadily. We did have a COVID impact in Lamphun in the fourth quarter, but it was minimal, so no real impact. You can see here new auto sales were actually up over last year, but still well down from previous years, pre-pandemic years. So we believe there's still opportunities for growth because the problem has not been sales, the problem has been supply chain issues. Moving on to our operation in Jiaxing, sales were up in the quarter year on year, 38% and 21% for the whole year. And whilst the revenues increased quite nicely, we suffered having to buy a lot of materials in the market because of the supply chain constraint. And plus the significant strengthening of the renminbi, approximately 7%, the operating contribution did not grow as high as the top line. Smartphone sales grew approximately 4% for the whole year. But if you look at this chart, you can see that it's still well below the levels of pre-pandemic. And this is again relating to chip shortages. Moving on to our Ayutthaya operation, we recorded sales up 27% for the quarter and up 25%. You may know that we were hit quite badly in the third quarter due to the COVID situation, but we more or less recovered in the fourth quarter. We are signing new businesses in new industries, which will help us grow in the future. So that is good news. We completed a 25% expansion in the floor space, and which will accommodate another 15% of more equipment, which will come in during the course of the first half of this year. And so overall, Ayutthaya made a strong recovery from 2020. We had a much higher loading, good cost control, and in this case, a favorable exchange rate. So the performance was much, much better. Moving on to our IC packaging in China, for the quarter up 37% and for the year up 52%. We saw strong growth in our EV module assembly lines, but unfortunately, similar to the micro business in China, we suffered from material shortages, having to pay additional costs to get materials in, and a strong renminbi. So once again, the contribution in terms of operating profit was not as high as the top line growth. You may know that we are and have been refocusing our China operations to support the domestic growth. China is investing very heavily to become self-sufficient in manufacturing chips. And they spent over $20 billion just last year in new wafer fabs. So we think this is a good opportunity for our factory in Jiaxing to support this growth. Worldwide semiconductors grew last year 25% to 580 billion. That's a world record for this industry. Our average wire bonds per quarter is about 4 billion per quarter. And you can see the third quarter dropping down because of the COVID impact in the Ayutthaya, but a recovery in the fourth quarter. Our operation in Ohio also showed good top line growth, 76% for the fourth quarter year on year, and overall 41% for the whole year. You may recall we started a new business manufacturing inlays, RFID inlays, at the beginning of last year, and it has gone very, very well. Unfortunately, we also suffered from a shortage of ICs. Had we not had this problem, the top line growth would have been much, much higher. The growth for tire tags was flat during last year because of the COVID situation, but we expect to see a recovery this year. And it's the same thing with telecom and consumer. Slightly higher, but not much. And we again expect to see a recovery in this year. Over the course of the whole of last year, we suffered quite heavily with the COVID because, as you may know, in America, nobody believes in masks and that sort of thing. So we had a high proportion of our workforce out over extended period of time. You may know that our operation in the US in Ohio is the world's leading producer of RFID tire tags. We have recently signed an agreement with the major patent holder of this technology, Michelin, the French tire company, and we represent them to market these devices to many other large tire companies. We have moved to redesign a new product line because at the moment, all the tire tags are just going into commercial tires like trucks and buses. But now we have got a low-cost version which will go into the passenger tire, which is about 5 times the volume. So over the next course of the 3 or 4 years, we expect the volumes to grow very, very substantially for this business. As I mentioned, our RFID is growing very, very well and will be the main driver of this operation in the US going forward. Everything in the future that is sold in the shop will have, at least in America, will have one of these RFID tags because it improves management of inventory, it reduces theft, and is a far more efficient way of managing your supply chain and your inventory. Moving on to Cambodia, we recorded sales in the fourth quarter up 16% and just marginally up 1% for the year. Unfortunately, because of the lockdown, we could not receive any new customers. So it's been difficult to grow the business. We hope the situation will change sometime this year as Cambodia opens up and customers who have a lot of interest to work with us will come to visit us. We do have some new projects coming through in the third and fourth quarter of this year. So we are hoping to reduce our losses, which at the moment Cambodia is loss-making, but it's relatively small. And we believe that we can get close to break even by the end of this year. In terms of product application, the main increases was consumer, industrial, and optoelectronics. A quick look on how we think sanctions will impact going forward. I would say at the moment, Hana's order book still remains pretty strong, but the Russia-Ukraine issue puts a big question mark over a lot of supply issues because, and I'll talk about this later, Ukraine and Russia actually supply a lot of certain materials for the semiconductor industry. We think that automotive will continue to be strong, apart from any supply chain interruptions caused by this conflict, because they still have not been able to fulfill a lot of the orders. You can just look at second-hand car sales are all-time high because people can't buy new cars. Industrial devices, chips for industrial devices also remain strong because global recovery is still growing, post-pandemic. Of course, this conflict is now putting some question mark on that, but overall, we still think that there's opportunities for growth. We are concerned about smartphone business now because China is a big producer of smartphones for the Russian market, and because of the crisis and the ruble, Russia cannot buy anything. So this is something we have to watch very closely. Now, predictions for next year. This is pre-crisis. The analyst projections around 9% growth for the semiconductor industry. Chip shortages will remain, but hopefully will ease perhaps in the third or fourth quarter. We believe that the decoupling and localization continues, and many new businesses will increase the demand for the need for chips, such as digital transformation, artificial intelligence, edge computing, IoT, and that sort of thing. Nevertheless, the semiconductor industry is still a cyclical industry, so we have to watch this very carefully and think carefully how we expand going forward, given that we have an unprecedented situation because of the conflict. Now, Russia and Ukraine actually supplies a large quantity of chemical gases like neon. Ukraine produces 25% of the world's neon, and this is a gas that's used in manufacturing chips, not in Hana's business, which is assembling chips. But if you can't manufacture the chips, then we can't assemble them. So this is something we need to be aware about. I don't think it's going to be a major issue, but the supply chain was already quite tight, and it's going to put some strain on the supply chain. Russia controls 40% of the world's palladium, which is used in catalytic converters. So again, another problem for the auto industry. Russia is the second world producer of aluminium, but far behind China, which is used in the auto industry and electronic devices. And Russia is also a major producer of nickel, which is used in plating and, of course, for batteries for EV cars. Okay. Ukraine is the sixth largest titanium producer used in mobile phones. So this conflict is not going to help the constraints that we have experienced in the past with the supply chain. And overall, I think we all understand that the high energy costs, because Russia's main issue is oil and gas, is putting even higher pressure on inflation, which is going to have central banks increase interest rates, and this may reduce overall demand. So this is the one we're very concerned about going forward. So just in summary, we generated 3.5 billion in cash, up from 2.9. We ended the year at 6 billion net cash, down from 9.7, mainly because of our high capital expenditure, increase in dividend, and the write-down of the supply chain fund. We spent 3.8 billion, up from 1 billion, which is a significant increase last year over the year before. And we project 3.5 to 3.8 billion, including our operation in Korea for this year's capital expenditure. Now I'm going to briefly talk about silicon carbide. As you may know, we've entered into a new business. Silicon carbide is a mixture of silicon and carbon to produce a very strong material which allows energy to be transmitted very, very fast. And it is really the only solution if you want to charge your EV car quickly. And that's why it's a very exciting opportunity. However, the cost of silicon carbide is very expensive. The average cost of a silicon carbide wafer is between 6 and 8 times of a silicon wafer. So we founded PowerMaster Semiconductor in 2018. In 2020, we established our own factory. We have our own factory. And we launched our first range of devices in the middle of last year, a silicon carbide diode and super junction MOSFET and a Zener diode. And we are under development of medium voltage silicon and a silicon carbide MOSFET. And this silicon carbide MOSFET is extremely important for the EV car market. All our devices have met top-tier competition performance and reliability, and will withstand any challenge for IP, because we have filed and have achieved all patents for our devices. We received strong response from customers by the middle of last year, which gave us the confidence to invest in mass production lines. We placed the orders around Q3 last year, and they will come in to our factory around Q4, end of Q3, early Q4 this year. Okay, and between now and then, we are building up our manufacturing infrastructure and capability. We believe that this investment will transform the Hana Group's future in the longer term, because all EV cars and chargers will use silicon carbide. And so the growth of silicon carbide will match the growth of the EV car. And our operation in Korea will be the only Korean company that has silicon carbide, and we look to support the local industries there. We are also offering our capability as a foundry, and we have already signed our first major development deal. And we are also going to focus very heavily on China, because China is looking for a non-Western solution. China needs silicon carbide. They have their own, but the quality is not good. So they're having to buy from the major players, people like Infineon, ST Micro, On Semiconductor, Wolfspeed, Rome. These are all major Western manufacturers. And China wants to move away from the West, as you know. And of course, they would like to do it themselves, but until they can get the quality, having a supplier from Korea is the next best option. So we believe this is a big opportunity for us. Our projections for PMS over the next 4 years are as follows, as you can see from the slide. This year, we hope to generate around $19 million sales. We will launch the the silicon carbide MOSFET in the middle of this year, but it will take 1 year to qualify in the EV car. So next year, when we have the full production, we expect a big increase to 50 million. But when the MOSFET comes online, then we have another big jump in 24 to about 90 million, and then full production of our MOSFET, silicon carbide MOSFET, and break even in 25. We will, unfortunately, incur some substantial losses during this year as we invest to ramp up into mass production. And I think it will be in the region of between 580 to 620 million baht will be consolidated into Hana's operating profits as a result of this ramp up. We will be negative EBITDA, but expect to break even by the middle of next year. Looking ahead to the future, however, the margins, gross margins for this business is about 2 times the gross margins that we can achieve in our core EMS business. And that's why we want to look to the future for this business. The silicon carbide MOSFET will go into many devices, so it's very important that we successfully launch this in the middle of this year. Every EV car needs an inverter because when you charge up the battery, you have to convert energy from DC into AC. Okay, so every single EV car has an inverter, and every inverter has 14 modules, and every module has 6 packs, and every pack has 1 silicon diode and 1 silicon MOSFET. So every EV car needs at least 84 diodes and MOSFETs, or more if the power is greater. Okay, that is why we are very confident of the high growth of demand of silicon carbide as EV cars take off. And as you know, it's the fastest growing segment is EV cars in the auto business. Last year, EV cars grew at over 100%, but they're still less than 10% of all cars manufactured. So there's a long, long way to go, and it will take at least 10 years to fully convert from ICE cars into EV cars. And China represented 50% of all the global EV sales, and that's why we're focusing on China. Okay, thank you very much for your time, and I open the floor for questions. So I think I've answered the first question. How the company handle chip shortages? The only way we can handle chip shortages is to place orders long time in advance. There's nothing more we can do, and this is what everybody does. Higher cost of material and commodity prices will affect us, and we are monitoring these very closely, and we will pass those on to our customer. So Hana got started 5 years ago. We want to look to change Hana over time, and we focused on silicon carbide as a potentially interesting product line. At that time, we did not know how to get into it, but we found a small team of people, experts in this field in Korea. So I hired them, formed a company. I have pledged to this team 16% of the company if they meet certain key milestones, which so far they have. The first thing was to design a range of silicon carbide devices, which in terms of its performance and reliability is world-class, top tier, and meets the same condition of all those major companies I talked about. And they have done that. Secondly, they had to patent these, make sure that we could not have infringement on IP, and they have done that. The third thing now is to go to mass production, and this is where we are at the moment. So this is still a risky and a very big issue, but we are confident that we can be successful. And as I told you, we've ordered all the equipment, and it will come in place in the third quarter. Up until the end of last year, and over the past 5 years, Hana has invested approximately $100 million in this business. We have committed another $65 million in machinery and equipment to go to mass production. And we believe that over the next 3 to 4 years, this will transform Hana's overall business, because we're changing from a service company into a production company. So in terms of the smartphone business, as I mentioned earlier, we have concerns for our customers in China who, of course, sell to everywhere in the world, but Russia is one of their markets. And as you know, the Russian market basically is stopped. So that is a problem. We don't see the impact just yet, but we believe there will be some negative impact, so we have to be careful. That said, 5G is still giving a strong push for many customers to change their phones over. So up until this crisis, we were quite confident of some good growth in the smartphone business, but now there is a question mark because of this conflict going forward. We do not have a plan to buy back the stock. We prefer to continue paying dividends. We think that's a more efficient way of returning money back to shareholders. Can Hana pass incremental costs back to customers? It depends what the cost is, but if they relate to increases due to commodity prices, we can. We have a formula and we have agreements with our customers that we can do that. How many products in Hana's pipeline? Well, we have many, many products. I don't know how many, I mean, many hundreds of products in our pipeline. The important thing is that we continue to have new business opportunities. And one of the things I can tell you that we believe that Asia or ASEAN will benefit in the long term from this crisis, because China's alignment with Russia is making the West very nervous. And we see much more interest from Western companies who are wanting to reduce their exposure to China. Russia's not an important economy other than energy, of course, right? But China is, and everyone is thinking about what is going to happen if China moves on Taiwan. Okay, so now the West is looking very closely at their supply chain. Nobody thinks it's going to happen today or even in the next few years, but it takes a long time for this to change. So I think ASEAN and ourselves in Thailand can be a strong beneficiary of this. So as a question about break even in silicon carbide, as I gave in my forecast, we are projecting in the end of 24 to break even currently, unless of course it could be quicker if we are able to sign any significant special deals with major companies, in which case, of course, we have to review the whole situation again. What is that?
I think that just we will have the opportunity day, right?
Opportunity day. I'm not sure about this. I'll certainly look at it, and if we can join, of course, we would very much like to attend. So in summary, as I've tried to explain to you, we are definitely going to be under pressure because of our big investment and ramping up the silicon carbide project. So this year, in terms of operating profits, will be challenging, okay? But we are confident that if we can succeed with our ramping up of the silicon carbide, the losses will reduce over the course of next year and onwards, and we will have quite strong growth rates, because this is one of the very few industries which has a very, very exciting future. Because as you can imagine, over the course of the next 10 years, every single car company will be changing from internal combustion engine, ICE car, to EV car. Many countries have mandated by 2030 or 2035, you cannot even sell a petrol car. I am sure now, if you could have an EV car, you'd be very happy, because gasoline prices are very, very high. Unfortunately, the supply is still very limited, right? Because the ramping up takes time. So I think our plan has been good, but we understand that we have to invest very heavily in order to get the return. But our team is good, we're very committed, and I think the long-term future is bright. Any other questions for me? Didn't say in Thai, so that could speak English then.
ครับมีคำถามอะไรอีกไหมครับ
So in terms of profits for silicon carbide business, let's talk about gross profits, because that's probably the easiest way. The gross profit margin, as I mentioned earlier, when the manufacturing efficiencies are scaled up, will be around the 30% range. Okay, and if you compare that to Hana's existing business, our gross profits are between 12 to 16%, depending on many things like exchange rates. So I would say, on average, this business has a gross profit margin which is double that of our existing core business today. And again, it's one of the reasons why we want to focus on it. But also, when we have our own manufacturing of our own chip in Korea, we can use that chip and develop new businesses in Hana's existing core activities. So one of those is when you have the chip, you can put it into the module. I had a chart about the module, and we are designing our own modules, which we expect will come in the next 2 years. And this will be done both in China and in Thailand. Okay, so not only will this help with the average increase in margins going forward, but it will give opportunities to improve also the business, our core business, because we have control over the chip. So what is happening is Hana is moving towards a product company and away from a service company, where we have control over the design and the technology.
What is the target revenue growth for this year?
So we don't give specific guidance in terms of revenue growth, but I think before the Russian-Ukraine issue, we were looking at low teen levels, right? Last year we grew over 20%, but I think that was an exceptional year, right, from a low 2020. So we're looking at high single-digit, low double-digit growth this year. Of course, the crisis in Russia and Ukraine may change that, and so we need to watch that carefully. I still think, despite that issue, we can still generate some positive growth, but we'll have to watch it very carefully to see how sanctions affect overall demand globally.
Company say more order because we cannot ship.
So in terms of inventory management, Hana has been similar to many other companies. Because of the long lead time for everything, we have to place orders 6 months, 9 months, 1 year in advance, where you don't really know what the real business is going to be. So it is a much higher risk when you do that, but we have no choice. If we don't do that, then we just can't get the inventory. So what we do is we try to work with our customer, because he also doesn't know 1 year in advance. Okay, so it is becoming a lot more difficult. This was the situation last year. We think that situation will continue throughout most of this year, and up until the crisis with Russia and Ukraine, we thought it would improve towards the end of this year. Now that we have this problem with the crisis and global sanctions and Russia and Ukraine's involvement in the supply chain, it may make the situation continue even throughout the course of this year. So I'm afraid it's going to be continuing to be a challenging year in terms of inventory and logistics.
So what is the chance of if some other people get into SiC, which profit target 30% might be less?
Okay, so let me explain about SiC. We are the new kid on the block. We're the new boy, okay? There are major companies like ST Micro, Infineon, onsemi, Wolfspeed, Rome, Infineon. These are big Western Japanese companies, okay? They are also investing heavily because the demand is much more than the output. So ultimately, like in any product, when there's a huge investment over time, the capacity increases. And then, of course, if the demand is not there, then the prices will fall and the margins will fall. This is what we call a product life cycle. And that will happen with everything, okay? But with silicon carbide, we believe that this will not happen for at least 5 or 6 years because of the ramp up in the EV car. The EV car is less than 10%, and it will take a long time for it to get to 100%, at least 10 years. That is why we believe silicon carbide has at least 10 years, maybe 7 or 8 years fast and then slowing down. But we think at around the 10-year level, because that is how long it will take for EV cars to become the main type of car going forward. Also, one of the good things with anything, when the price drops, you may be worried about the margin dropping, but because the price drops, the demand goes up, and silicon carbide can be used in many other applications, not just the EV car, like high-end consumer electronics, washing machines, fridges, dryers. The silicon carbide as a device is far more efficient than what it's replacing, which is IGBT and superjunction MOSFET, okay? But because the cost is high, those consumer electronics will not want to pay for it. But when the costs come down, then the volume will go up. So overall, you can still keep your margin, because even though you have a lower margin with a higher volume over manufacturing base, you can still keep the overall margin fairly strong. So I'm not worried about a margin issue at this point in time. My main concern now is make sure that we ramp up and get the good yields. One of the big problems with silicon carbide is that it is very difficult material to work with. In silicon, the average yield loss is less than 1% because we've been working with silicon for 60 years or more. Silicon carbide is only 5 years or 6 years old. And I can tell you the yield losses throughout the process is more than double digit compared to silicon, which is less than 1%. And it's very costly. So this is another area which can help improve our margins as we get more experience in learning it. Okay, so a lot of opportunity for improvement and expansion.
Hana have forward contract lock up the price?
No, Hana does not have any forward. We don't buy commodities, okay? Commodities will increase the price, but for example, we might buy a PCB and the PCB uses copper, but it's not our job. The PCB manufacturer has to buy future copper prices. We just buy the PCB. We do not manage the raw materials at that level, okay? So we're not involved at that downstream level. We don't have any business in Russia.
To make a wafer into a module?
No, PMS will not make the wafers. We will buy wafers from other suppliers like Wolfspeed and many others. We will not buy the raw wafer. So in terms of ESG program for Hana, we try to do our best to follow the directions of good governance. Now all our main factories have been fully facilitized with solar panels. Of course it helps, but it's not going to help that much because our energy uses are very, very high. And obviously the price of energy is going up for everyone, as you know, okay? But we do our best to support ongoing ESG projects with waste and recycling. Unfortunately, quite often, where we can have more meaningful inputs, we have to ask permission from our customers. So, for example, if I want to reduce the type of plastic usage, I have to ask permission from my customer. I cannot just do what I want. And our customer controls a lot of the things that we do as a service company. But we do our best, and we have fairly good score on our ESG rating. So you asked a good question about how can we grow our net profits whilst Korea is still making losses. Obviously, that will depend on how we can reduce those losses and how we can grow our profits. This year, it will be challenging because, as I told you earlier, this year is the year where we are having to ramp up substantially, and our equipment doesn't come in to the factory until the third quarter. Okay, so we will not be able to grow our top line because of the losses situation. But next year, towards maybe the second half, as the factory goes into mass production and our sales start increasing, then we have a chance going forward.
One question about we provide presentation.
This presentation is not for general distribution. I'm sorry. Any last questions? Because we only have 2 minutes left, I understand.
Some cash positive.
Okay, well, let me just then thank you for your interest in the company, and I hope you will understand our strategy of trying to build a new future for the company going forward. But I ask for your patience, because during that time we will have to make substantial investments, and this will impact short-term performance. But we are hopeful that the long-term performance will be reflecting a very positive trend once we get this business going up, get our Korean business up and running. And I think it's a very exciting future. We have sufficient cash in order to meet all our needs. I think we planned it well, but we always understood that you can't just get a business like this without incurring some kind of substantial investment and pressure on operating margins in the short term for the longer term benefit for the company. Cost saving plans. Like we have cost saving plans that go on for every year. But the main thing that can save our costs is increasing productivity. Wages are going up, as you know. Wage inflation is high. I can do nothing about it. I need to keep good staff. But what we do is work very closely on productivity in order to reduce our costs. Okay, shut down. Yeah. Thank you very much. Kop and Kap.